Hello, everyone. Welcome to a Wall Street for Main Street podcast special. My name is Mo Daoud, and today's special guest is Jerry Robinson. Jerry Robinson is an economist, published author, columnist, international conference speaker, and the editor of the financial website stmdaily.com. Robinson is also the best-selling author of the book Bankruptcy of Our Nation, 12 Key Strategies for Protecting Your Finances in These Uncertain Times. Jerry, thank you for joining us. I appreciate it.
Sure, Mo. Great to be here.
But Jerry, I was going through your book, Bankruptcy of Our Nation, and one of the first strategies that you talk about is financial education. And us here at Wall Street for Main Street think financial education is the most important thing that people should have. And because of that, if we have more financial education, I believe we have more prosperity in our society. So if you mind explaining to our audience, why is financial education so important? Why is it listed as number one strategy?
Well, Americans are receiving financial education. In fact, I don't know of a time whenever Americans in general have had more financial education than today. Unfortunately, the educators are the corporations, they are the corporate-controlled media, and they are government. And of course, that's a conflict of interest. All three of those, outfits have no vested interest in seeing our money stay within our pockets. Instead, they operate a conveyor belt that teaches us how to take all of our money out of our pockets, lay it on the conveyor belt, and it rolls right down the line, down to them, to the banksters, to the corporations, to the merchants, and of course to government. So it's very important for people and Americans to get the right kind of financial education. That is not taught in school, unfortunately. Most people get out of high school, don't even know how to balance a checkbook. They don't know how to do any of the most basic financial activities that most people would think of, when you get out of high school. So it's unfortunate that most people are taught by the mainstream press on how to do things. So that's why we wrote the book Bankruptcy of Our Nation. We wrote it to help people understand the basic foundations of financial education. What do people need to know? And I think in the book we really help people understand what money is. We help them understand how they can make more money, and it's not simply by working more hours. Instead, there is a very different way of making money and investing money that we talk about in the book. And I think that's the reason why. We feel for so many Americans who have just not had any kind of financial education of any sort at all. And so this book is an attempt to help them understand the most basic concepts on how to get ahead financially despite our economic crisis.
And I definitely agree with you there. And I think one of the most important part of financial education I think people should improve on is how our currency worked. We have a fiat currency system in this country, and it's debt-based too. And a lot of people don't even know what happened when you see the people on mainstream media say that the Federal Reserve is going to print money, and I don't think they realize that when they print money, it's a debt-based system, and so it's attached to the Treasury bond market as well. So if you don't mind, could you explain to people why having a debt-based currency system is dangerous for our long-term wealth?
Oh, of course. If you take out a dollar bill and you just hold it up and look at it, you'll see at the very top it says Federal Reserve Note. Now, if I say to you, Mo, if I say I have a car note, then you're more than likely going to understand that I'm saying that I have a car loan. That's what a note means. Well, a Federal Reserve Note, it's right there on the top. It says Federal Reserve Note. That literally means that it is a loan provided to the American people, to the American government in particular, by the Federal Reserve. The Federal Reserve loans money to the United States government. Every single dollar that's in existence has the same words on it, Federal Reserve Note. That's because every single dollar is a piece of debt. It's a piece of debt that is owed back to the Federal Reserve with interest. And the Federal Reserve not only loans the money to the United States government, they also get to set their own interest rate targets that they get paid back. So it's a really big, it's a big Ponzi scheme. I mean, they're just printing pieces of paper that have no intrinsic value. The only thing that gives the dollar any value at all is faith. Faith. That's why we hear so much about business confidence numbers and consumer confidence levels, because it really is a confidence game. It's a faith-based economy. As long as the people have faith that the United States government will not print too much money and destroy the value of the currency, then they're willing to hold on to it and transact with it and use it. However, throughout history, what we've seen is that governments abuse this right, they abuse this privilege, I should say, and whenever they abuse the privilege, they print too much money, and then it creates a fear-based economy, not a faith-based economy, but a fear-based economy. And that's where we are moving to now. That's why we've seen gold spike, from $200 an ounce back in 2000 all the way up to $1,900, $1,900 in the last couple of years. So there is a lot of fear that's motivating, and it's replacing the faith that Americans used to have in this paper debt-based economy. So it's important for people to understand that, because the end game is always the same. Every currency dies the same death. It dies the death of hyperinflation. And the United States dollar is no exception. It will end the same way every other currency has ended. And we are already seeing the beginnings of that. We've been seeing the beginnings of it since 1971, whenever the gold backing was taken away from the dollar and it was moved strictly to a paper fiat currency. And from that time, we've just seen massive amounts of dollars, printed, and that leads to, as we said, hyperinflation. So that's why it's important for people to understand, and that's why we talk about in the book Bankruptcy of Our Nation the need to diversify your assets. Don't just hold all of your money in dollars or in dollar-based assets, but instead consider diversifying among hard assets and other various asset classes, even including other fiat currencies, which may sound silly, but in reality, whenever the dollar goes down, it has to go down against something, and it's going down against other currencies and gold. So holding other stable foreign currencies can also be a nice hedge against a declining U.S. dollar.
And yes, and not only the Federal Reserve and the U.S. economy printing money and debasing their currency. Right now, we have a global currency war going on, and the Japanese central bank are now printing money. I think they're printing $120 billion per month as part of their QE program, and to get their interest rate at 2%. We have the British central bank printing money. In the Eurozone, they're printing money. Right now, we have a global currency war with everybody trying to debase their currency to enhance their export market to get the economy going. But so far, it has not worked. And so I want to ask you, do you believe Japan will be the first country to fall in this currency war?
The Federal Reserve talked the Bank of Japan into doubling its monetary base, and to do so, like as you mentioned, they're going to be buying tremendous amounts of treasuries. They're going to be printing lots of money, and it's historic. There's never been anything like it. Unfortunately for Japan, as you likely know, they have the world's largest debt to GDP ratio. Now, they don't have the largest world debt in history. That's the United States. But they have the largest debt to GDP ratio in the world, and it's around it's over 200%. So Japan is highly leveraged, and this just doesn't end well, especially when you consider that Japan is a developed nation that is failing in many ways to coordinate its economy with China. China has used and abused Japan, and it's been an abusive relationship on both sides. But in many ways, China is the rising dragon, so to speak. They are the rising economy, and in many ways, Japan will suffer from the rise of Japan, even though you would think that they would benefit. China is structuring its economy in such a way where it really is going to be the primary beneficiary, and in competing countries in the area will either have to submit and get in line to benefit or not. And the yen and the Japanese bank and the Japanese government is actually becoming more hostile towards China. So we'll see, but I don't know if they'll be the first, but I do know that they will eventually be toppled, because they have certainly moved in a very wrong direction. I think that you would expect to see their stock market, the Nikkei, to continue up. I think this is still a time to be buying Japanese stocks, unbelievably, and to be shorting the yen. That trade is still intact, and I think it'll remain intact for at least the next couple of months.
And I agree. And the hedge fund manager, Kyle Bass, has been shorting the yen against the dollar, and he's been long gold. So, and he said that the Japanese economy will have 18 to 24 months until we see a collapse. So we'll see what happens there. So I want to go back to financial education and talk about how the way people save for retirement. Like you talk about in your book about 401k, the IRA, the Roth IRA. So far, in the past few years, we're seeing people starting to use their 401k just to get by and pay their bills now. And it's an interesting statistic that I found online about people who are trying to save for retirement. And I found out that 67% of workers said they're behind schedule in saving for retirement, and only 24% are very confident that they'd be able to live comfortably in retirement. And if you look at that and think about the inflation that's going on around the world, it's become very difficult for people to live. The people are going to retire to live comfortably when they have to battle inflation for a very long time, and which makes these kind of government-sponsored retirement accounts like the 401ks and the IRA seem like a total failure. Do you agree with that?
Well, I think there's two components there to kind of unpack. The first one, and maybe I'll come back to it, is the comfortable retirement. I want to tackle that, but before we talk about that, let's talk about the IRAs and the 401ks. Yeah, in essence, what those are government-controlled assets. The government controls the amount that you can put in. They control the type of tax breaks that you receive. They control the distribution tax as you take it out. So they have total, complete control over those assets. And if you listen to most financial advisors for the last 30 or 40 years, and especially the last decade, they have encouraged people to put money into government-controlled assets. In fact, the typical yuppie retirement plan today in America is a house and a 401k, or a house and an IRA. Unfortunately, both of those assets are government-controlled. If the government took away the tax benefits from real estate, it would be devastating. It's a tremendous tax shelter. So in many ways, people are highly leveraged in government-controlled assets. The United States government at any point could choose to raise the distribution taxes upon people taking money out of their IRAs or 401ks in retirement, and people could do nothing about it because it is a government-controlled asset. So we often liken putting all of your money and maxing out a 401k or an IRA, we liken it to putting all of your money into a black box, locking it up, and then handing the key to the government and saying, just give this back to me whenever I retire. I don't think so. I think it's important for people to be highly diversified and to be careful with 401ks and IRAs because the government will eventually slap distribution taxes on those because they're bankrupt. And they need money, and there are trillions and trillions and trillions of dollars sitting in there that are untaxed, and the government knows it, and the government needs that money. But on the second point, the retirement, I do want, if I have time, I just want to touch on this just for a minute. The idea of a comfortable retirement. Well, we have really moved into an unsustainable economy. We really are. We don't really manufacture anything anymore, and when you think about it, the typical American today outsources all of his production. Almost all of his production is outsourced. So if you look around your house, you'll discover that, and not everybody, it all depends who you're talking to. I'm not trying to be insulting, because I know there are many people who do still make things. But for the most part, I'm talking, generally here, but for the most part, most people don't really make anything anymore. If you look around your office, or you look around wherever you're sitting at right now as you're listening to this program, I challenge you to look around and find one thing, just one single thing that you have made from scratch, that you have physically made with your own hands. And you'll find that most of the time, Americans have chosen to outsource that. They have instead chosen to collect U.S. dollars and to trade it for things that they want. Well, that's an unsustainable thing, considering that the dollar is unsustainable. So the idea of a comfortable retirement, I think, is going to have to be challenged, and it's going to have to be reframed, because we are living in a very unsustainable time now, trading dollars for the basics of life. And eventually, other countries who produce things will not want the dollar anymore, and therefore we're going to have to learn how to make things again. That's why we talk about in the book the importance and the need of learning how to avoid the consumption trap, how to get by with less stuff, and also learning how to make some of the things that you consume on a daily basis. It's really important to change your mind. It's really a mindset and a paradigm shift that can set people free financially.
And you think about all the government job that's been created, and the result of that, it's crowding out the private sector job. So we're seeing a lot of jobs that don't produce anything. There's no return on capital either. So there's a lot of unproductive jobs out there. I agree with you there.
Yeah, we certainly see that too in the Homeland Security area, and the United States is busy building more of a security complex, and they're obviously hiring people to do that, and that's kind of the area that we moved into. Lots and lots and lots of government jobs, and fewer and fewer and fewer private jobs is the way that most countries go whenever they begin to fail. They start trying to create different public works options. That's what happened in the Great Depression. And, we're certainly seeing that today, and I think we'll see it even more. The government's just going to become bigger, not smaller, and you're right. I think that is a trend that people need to pay attention to.
So one last question I have about financial education. Do you think the world would be any different if people financial IQ was higher? So if they learn more about how capitalism works, how the free market economy works, how they learn more about Austrian economics. Maybe they read Atlas Shrugged instead of reading the college textbooks that promote central planning economics or Keynesian economics. Do you believe the world will be different if people just learn about how things work in the economy?
It would be different. It wouldn't be better initially. It would be better later, but not initially, because when people wake up to really what's happening around the world, they wake up to the fact that it's a paper currency and a debt-based monetary system, like you said, they often rush for assets that can protect them from that. Gold and silver are certainly two areas that people have rushed to, and then also other types of hard assets. And most Americans are over-leveraged in paper. So if there were a sudden financial IQ raise, across the board for Americans and the world for that matter, you would see a rush out of paper assets. That would destroy the economies today. So in some ways, yes, it would be better, but it would not be better initially, because our entire economies would have to be turned around. Right now, the banksters, a lot of fraud and a lot of unscrupulous types of people have gained control of the financial systems of the world, and that's the way it has been for some time. So they are controlling this, and they are steering it in the direction that they want to steer it in. When the people wake up, they will move away from that, and then we'll have to start over. I think that's where it's all eventually going to go to. We're going to have to see a reset on everything that we have done, and that's going to be devastating up front. But I tell you what, it'll be very empowering for the individual, and for those who are properly positioned in their assets, they can actually turn that reset into a very profitable event.
And we're starting to see a lot of people starting to wake up, especially in the younger crowd in this country. A lot of Ron Paul followers, a lot of people that are starting to believe in free market and Austrian economics. I'm starting to see some of that going on, but it's going to be a long process.
The last sound money revolution that the United States experienced, to my knowledge, is back in the 1890s. And we really haven't had a sound money revolution since. We haven't had the people rise up and demand that we have some sort of commodity backing for our money. And I believe that we're starting to see that. Of course, you mentioned Ron Paul, and Ron Paul was running for president back in 2012. And of course, I was supporting Ron Paul. But it was interesting to see the people who did not support Ron Paul, what they would say, and I think you might even remember this. Here's what they would say. They'd say, well, I really like Ron Paul's economic policies, end the Fed, and let's have gold standard. I love all that. The problem that I have with Ron Paul, they would say, is that he just doesn't understand foreign policy very well. He doesn't understand that we have to go bomb other countries. We have to do that. We have to go bomb other countries. And what was interesting was, and you could see the lack of financial education in these people with that answer, because what they were basically saying is get rid of the Fed, but keep bombing countries. And what Ron Paul would say to that is, you can't afford to bomb countries when you get rid of the Federal Reserve, because the Federal Reserve funds wars. So it's interesting how ignorant, and I say that in the most kindest terms, but how financially ignorant many people are regarding how everything works. Even the Federal Reserve itself, they want to end it, but they still want to drop bombs, and they don't understand that the Federal Reserve funds the wars. And if you get rid of the Federal Reserve, you can't pay for the wars. So, yeah, I think that Ron Paul was just a bit ahead of his time. Unfortunately, I wish 2012 would have been the Great Awakening and people would have realized what's happening. But apparently, we're going to have to experience more pain before we finally wake up and realize that the two-party system that we have here in America is an absolute farce.
Yeah, and most people in nature are reactive instead of proactive, so it's going to take a crisis until people start to wake up, and I agree. Yeah, I agree with you there. Yeah. So one last topic I want to discuss before I let you go is I want to talk about the commodity market, and you talk about that in your book, and you have an interesting investing strategy regarding that, which is called PACE, and that stands for precious metal, agriculture, commodities, and energy. And you think this is the four areas investors should look at when they want to invest. And this week has been an interesting week for the precious metals market. We had a big drop in gold and silver, and yet the demand is going an extremely record high level. And if you look at the premiums around the country, in India, the premiums went from $1.20 to $3 to $5 per ounce for gold. That's how much the banks are charging for the gold. At Shanghai Gold Exchange, the premium's up as much as $10. In Turkey, it's $20. So the demand is increasing as the day goes by since that big drop. And I want to get your thoughts on why do you think gold and silver had that big drop, and what do you think is going to happen going forward?
Well, the reason that they had the drop, in my mind, based on everything that I was able to read, plus the sources that we have here, was that the Federal Reserve was submerging the price of gold. And I know that sounds somewhat conspiratorial. However, our organization is called Follow the Money, and you really have to follow who has the motive to see gold go down. Well, the United States, if any country on the face of the planet has a motive to see gold prices go down, it's the United States, because the dollar itself is in jeopardy. China right now is making massive amounts of currency deals, currency swaps, currency agreements with other countries. They're sidestepping the U.S. dollar in trade and in especially oil trade. They're targeting countries like Iraq. They're targeting countries like Iran, and they're also targeting our allies like Saudi Arabia and attempting to move them away from the dollar for oil trade. So this has been going on for some time. And when you take a look at all of this, you realize that there is some startling news occurring around the globe regarding the dollar. And the primary beneficiary of a declining dollar is gold, and gold has certainly played that beneficiary role the last several years. And the Fed and the big banks certainly can manipulate the gold market. They can manipulate the paper gold market, and they did. They had all their banks, Goldman Sachs and many few Asian banks, and then several European banks and many U.S. banks issued alerts to their customers and clients that it was time to sell gold. They were tipped off by the Federal Reserve. This was a big scam designed to drive the gold down and buy the dollar more time. Unfortunately, it's not going to work. As you mentioned, the amount of physical gold buying has skyrocketed, and the premiums are going up, and that tells you something very interesting, because if the premiums are going up, it's because these suppliers are not interested in selling their gold and silver at these levels. The cost to produce an ounce of gold today is $1,200 approximately, and so you get down to that level, and all of a sudden you aren't making any money as a producer. So the premiums are pretty skinny right now. Are the premiums over the cost of production, and so we're certainly seeing that. But we also see a huge demand for physical. Meanwhile, the paper market is still having a hard time. We're still seeing novice investors and people who are just investing because their financial advisor said it was a good idea to have a gold ETF or whatever. We're seeing many of them dump their holdings. But the true people who understand what's happening, the gold buyers who are holding physical metals, they're not moving. In fact, we have a gold unit here at our organization, and our precious metals advisor this week has never, ever, ever in his 35-year history received as many orders this week as he has. And we're seeing the same thing across the country and across the world. People are paying the higher premiums. They want the physical metal. They know that these are discount prices. If you walk into the store and you like to buy a can of tuna and it's on sale for 89 cents, you don't look at it and say, well, I really wanted to pay $1.50 for that. I'm going to wait till it goes back up. And it's the same way with gold. When gold goes down, smart investors buy it. It's on sale. When gold goes up, you wait for another dip. So I think right now is a great time to be piling into gold and especially silver. Silver, it looks particularly attractive at these levels, and I am buying this week aggressively.
And I agree with you there, and a lot of people were very nervous when we had a big drop, but I was very happy because now I can buy silver at $8 cheaper than a month ago. So, I mean, I had no complaints about what happened there. And
it's nice, too, for people, and I think another way to think about it, too, is many people who maybe got into gold and silver late in the game, maybe they started buying maybe a year ago or so. Well, by buying some more now, what they're able to do is lower their overall cost basis. Maybe they bought some silver at 30, a year ago or whatever. Well, now they can buy it at 23, and that lowers their overall average cost basis, which, that's always a good thing.
Oh, yeah, I agree, definitely. That's a great point that you just brought up there. And you mentioned about the producers, and I looked at the financial statement for some of these miners, and the cost to put these mines in production is somewhere around $1,200 to $1,300. So, and for the silver miners, a lot of them are like $26, $27. So a lot of them are in the negative with their cash flow coming in from the miners. So if we don't see a spike up in the gold and silver prices, a lot of them might have to shut down their mine, and that's going to cause an even tighter supply for gold and silver.
It will. And one more point about silver, I think that is important, in addition to it being a little bit upside down right now with the cost of production, also consider the fact that the 2010, 2011, I can't remember what year it was, the U.S. Geological Survey that was put out, it had a very startling statement in it about the amount of silver that's in the Earth's crust. And according to the U.S. Geological Survey, within the next 7 to 8 years, and that was as of the study, so we're probably looking at somewhere around 2017, 2018, the U.S. Geological Survey has basically stated that silver will be depleted from the Earth's crust. It'll be the very first element on the old, periodical chart that will actually be depleted from the Earth's crust. So silver itself is a dwindling resource. It's a finite supply. They will certainly be able to get more silver by going way down, and it'll drive the cost of production up. But the easy silver, what we call peak silver, I guess, that's certainly where we are. So being able to buy silver right now at $23 an ounce, in my mind, is a gift.
I agree with you there. And a lot of the miners their cutoff grade, right, is going higher and higher because of inflation and rising energy costs as well. So it's going to be harder for some of these miners to stay profitable in production because of that as well.
Yeah, I would agree.
So, Jerry Robertson, I'd like to thank you for coming on the Wall Street from Main Street podcast. If people want to find out more about your work, where can they go?
Yeah, they can just go to our website. They can just Google Follow the Money Daily, Follow the Money Daily. They can go to followthemoneydaily.com. There we have, updated information. We have a Facebook page, which we do daily news. We have a Twitter page. We also have a YouTube page, and we have a weekly podcast. And, of course, the book, Bankruptcy of Our Nation, which they can pick up right there, or they can pick it up in a local store or Amazon. But we are certainly here to educate people and help them, and if they just look us up, we'd be more than happy to provide them with all of our resources. We get lots of resources, videos, and articles on our website.
Okay, great. Well, thank you for your time, and hopefully you can come back on later down the road.
Yeah, thank you, Mo.